let's go to the trading floor where we have Tim Evans standing by. He's with the Longleaf Trading Group. And Tim, thanks for joining us here. Glad to have you aboard. Let's go take a look at our grain trade today, a firmer tone, and it seems like just in the last 20 or 30 minutes, things are firming up a little bit more here.
Yeah, absolutely. I mean, it's we got off to a bit of a rocky start last night. Soybeans, especially, with the Dalian exchange, beans pulling back, about 4%. So U.S. grain kind of followed that. Bit on the defensive early. As that U.S. dollar began to rally kind of mid-morning, that added some downward pressure on grains, but here midday we're firming up to go back in positive territory.
So the dollar currently 70 points higher, 100.190 right now. We were talking earlier, Tim, about this big gain that we saw in the crude oil market today, and producers are all kind of looking forward to 2017 to find a point where maybe they can lock in some energy needs for next year. There has been some talk about maybe holding out for that $40 mark. But boy, they're reversing again today, and now we're up 202 on December crude oil futures. They're getting further away from $40 now. What's the reason for the big surge here in the crude oil market today?
There's been some chatter relating to this potential OPEC deal. The market, if you remember, 3 weeks ago, we got up to about $52.50 a barrel on speculation that OPEC was going to be able to come to an agreement on a production cut. As time went on and they began to look at the details of what that deal would potentially look at, all the competing forces that would need to come to consensus found a lot more difficulty than they originally thought. So the market began to discount the likelihood of that occurring. There's been some chatter overnight that they actually could be experiencing some positive momentum to actually put a deal forward. That OPEC meeting is on November 30th, so it's yet to be seen, but the market's pricing in, I guess, a stronger likelihood that they're actually going to be able to agree on something.
I wanted to ask you, before I let you go, this wheat market, it has been trading higher today, but is it following the corn, or is it trading on its own fundamentals today?
I think it's trading on its own fundamentals. If you kind of follow the overnight and early morning price action in soybeans or corn, wheat got off to a good start early and kind of held on to that early. So, if you want to kind of look at it as a group of three today, I'd say wheat overall led the group.
All right, very good. And then I wanted to ask you as well, as we look forward to the end of the week, I want to get your comments here in just a little bit. As we talk about livestock, we have a big major report coming up, livestock related. That'll be this Friday, and we'll have another one coming up on Tuesday. I want to get your thoughts on that. So when I bring you back, we'll discuss the cattle and feed report and traders getting positioned ahead of that. We'll be back with Tim Evans in just a moment.
Sometimes.
Well, we're talking with Tim Evans. He's with Longleaf Trading Group, and he's direct from the trading floor in Chicago there at the CME Group. And we're going to talk a little bit about this livestock trade here today. In fact, Tim, if you don't mind, we'll go ahead and take a look at the livestock futures right now and get everybody updated. Right now, we're just kind of treading water in this live cattle market. We have December currently trading at 105.68 per hundredweight, so we're just up a dime. And February now only 3 cents higher. Last trade, 106.55 per hundredweight. So it's right in the middle of the trading range. We've had about a 90-cent trading range there in that February contract. Currently on the feeder cattle, if we switch over there, here you have January now 20 lower at 122.12 per hundred, and you have the March down 43 cents at 118.02 per hundredweight. Didn't see a lot of movement in the beef cutout value updates that we got at midday from USDA here. Tim, we had the choice cuts reportedly up 50 cents, I guess, at 184.42. A bigger move in selects up $1.29 at 169.01. So I wanted to get your impression on what do you think technically of this cattle market right now? What kind of footing is it standing on?
Well, interestingly, I think today's price action is kind of reflective of the bigger picture fundamentals that we have in the live cattle market, currently. What we have been seeing here, we've been seeing a lot of improved interest in livestock markets. We saw index funds add about a little less than 1,997 contracts last week on the long side. That consumer sentiment number Friday last week, added some hope that we could potentially be seeing better demand numbers as we get toward the end of the year. we also obviously saw, slaughters up, 9.3% last week. So I think we're kind of balancing reality versus hope. I mean, the reality is, supplies are big and they've been that way and they expected to continue to be that way. But there's hope, that the demand numbers can, continue to pick up and balance out the kind of burden of supply that's been on the market.
All right. Now, we also have some new midday updates on the pork carcass cutout values, some of the primal cuts on the pork side. Here's a look at those for the viewers at home. Carcass values on the pork were down 28 cents at midday at 74.38 per hundredweight. Loin market up about 21 cents. The big mover today, this morning, was the ham market going up $2.29. And the belly market actually down $4.85, but that ham market had a pretty good improvement. Of course, once we get past Thanksgiving, I guess a lot of folks consider that to be ham season. Looking forward to Christmas there, huh?
It is at my house, that's for sure.
Yeah. So what do you expect out of this lean hog trade? Let's take a look at our futures there. They've been under pressure this morning. Right now, we're down $1.02 in December at 45.88 per hundredweight. February down 98. What do you think here?
I mean, overall, I like the fundamentals of hogs quite a bit. If you kind of look at all the fundamentals on balance, you can make a very strong argument that we could be seeing upside here as we go toward the end of the year. The one big negative factor, and that's what I think is weighing on the market today. If you watch the dollar index trade today, the live cattle, or I'm sorry, the lean hog market began to pull back when the dollar index kind of found support and went back into positive territory.
Okay.
The Mexican peso clearly is what is driving that. Mexico in terms of production, or exports in terms of production, account for about a third of total production. Of all those exports to Mexico account for about a fifth of that. So on a percentage basis, it's a substantial amount of pork. And obviously, as his dollars continue to move higher and the peso's gone lower, it makes buying pork that much more expensive for consumers in Mexico. So, that's a big concern in front of the market. And, the market's going to be following the exchange rate between the dollar and the peso very closely moving forward.
Exactly. Well, Tim, good to visit with you. Tim Evans with the Longleaf Trading Group in Chicago. Good to hear from Tim and get his analysis on the market. So interesting, and we welcome another trader into our roster. Always
quite a variety of opinions.
I'm always excited to add more traders to
Thank you very much.
group.
Well,